Deutsche Asset Management's a key division within the global investment bank, Deutsche Bank. Deutsche Asset Management manages more than $1 trillion Australian dollars for individuals and institutions right across the world. We're passive, active and alternatives. The investment team that manages Ironbark Paladin Property Securities business sits within the alternatives asset class, and we have 3 dedicated investment professionals that are looking for opportunities for the fund. We're a global business, so that allows us a large support team. So the investment staff are doing nothing more than looking for interesting opportunities for our investors. We've had a strategic relationship with Ironbark since 2009. Ironbark are the distributor and the responsible entity for the funds. Together we work closely to bring property securities funds to the market, and they have appointed us as the investment manager of both their global and domestic property funds. Alignment with our investors is very important to us. We do it in 2 primary ways. The first is an investment in the fund, and secondly, a significant part of our compensation is at risk and is aligned to the performance of the fund. The investment objective of the fund is to outperform the Australian Real Estate Securities Property Accumulation Index by 125 basis points over rolling 3-year periods before fees. We are a true-to-label property real estate securities offering to the market. And where we don't see value in the index names, though, we have the ability to invest about 20% of the fund into non-benchmark names, and we do this often. And secondly, we have the opportunity to invest about 10% of the fund into international securities, and we're really leveraging our global platform in doing that. We have a few key pillars that we thoroughly believe in. The first is that real estate fundamentals are key. The second is we believe real estate securities is a local business. You have to really understand the real estate and be in the local market. And the third thing is we believe we can use smart portfolio construction to mitigate risk and enhance the return for the investor. We really focus on 3 core buckets within the way we invest. Within the large caps, within the index, we have very high conviction. Often if we don't like a stock, we will not hold it. And we'll put all of that weight into some of the stocks that we do like. We also have a dedicated small cap analyst in Eloise Blake. She spends 100% of our time looking for interesting small cap opportunities in the space for the fund. And that's a space where you can find some really interesting alternative asset classes such as storage, childcare, education, retirement. So we like that. And the third core focus for us is in international, and that's where we're leveraging our global platform to find interesting and new opportunities for our investors. Typically, they will require a much higher return than what we can see in the local market, given that you take on some country risk in doing so. We start by screening the universe, so anything that's real estate related, we'll take a look at. And then the current investment universe is more tthan 40 stocks and more than $140 billion. We then start to look at those assets, the fundamentals of the real estate that they're invested in. We want to understand what the demand outlook is, what the rent outlook is, what might impact the security of the income going forward. We do that by talking with management of the vehicles. We do it with industry experts. We go and visit the assets. So again, real estate fundamentals are key. We then go about building detailed valuation models and cash flow models. And that enables us to make a valuation, and we come up with a forecast total return. We then put that into our ranking model, and we can sort of look at the whole sector on a risk-return basis. And then we go about the portfolio construction. So we let the returns of the vehicles sort of dictate how the portfolio looks, but then come over the top and sort of make sure we're not taking any undue factor risks in constructing the portfolio. At the outset, we don't have a maximum or minimum target to any one subsector. The index in the 8 REITs is very much dominated by the traditional commercial asset classes of retail, office, industrial. We invest in those, but at times, retail is a good example. Right now, it's structurally challenged and might be for some time. So we will look to diversify that risk and invest in particularly some of the smaller cap stocks that have differentiated asset classes, and some of those are childcare, retirement, healthcare and things like that. We think a lot of risk can be mitigated during the portfolio construction stage, but like any asset class, you can't avoid all risk. We have stock-specific risks, so there could be a certain company for some reason or another misses earnings. So we try to diversify that stock-specific risk through smart portfolio construction and generally invest in 10 to 20 companies. Of course, you cannot, it's hard to diversify away from a big macro shock, which would see large vacancies in some assets and sometimes the asset value impacted. I think it's a topic that's been debated widely. I think there is an opportunity for passive products in the sector, but our view is that there is sufficient dispersion in returns in the sector in order to be able to add additional value to our investors. I think if you think about passive products, there's sometimes investing in indexes which are dominated by large companies. A company's size doesn't tell you that it's a good company to invest in. So we counter this by investing outside of the index is one way we can do that. The second way is we get very good access to new initial public offerings. So new IPOs are a very good source of performance for the fund. These IPOs tend not to go into an index until they've demonstrated a period of trading on the market. And the third thing is if we can't see value unlocking from a share that we're in, we'll constructively engage with the board, with the management teams to unlock that value for our investors.